You wanted to be part of this new internet thing. What were you going to do? You're going to buy AOL stock. You're going to buy Cisco stock. You're going to buy people that were already doing things on the internet. In a blockchain world, you have the ability to be able to buy into the actual infrastructure itself. You're not buying a Cisco router. You're buying into the fiber effectively, in
The
the
actual pipe.
capacity. So it's another layer down.
I've been looking forward to this conversation with you, Robert. Um, we've cheekily decided to brand this podcast as "Convince Me," because
Hmm.
I think that the place that we're in the crypto ecosystem is um, we sort of have a problem in crypto right now, and that is just finding what's actually useful in this ecosystem, what
Hmm.
is what's not just pure speculation,
Right.
um, and uh, that's really the subject that you are focused on. This is your
Hmm.
investment thesis.
Yeah.
Um, but before I say more, Robert, if you'd like, why don't you give the intro from your perspective?
Yeah. So first of all, thanks for having me on. This should be a fun conversation. I A bit of my background, I think, kind of helps maybe color how I look at the crypto market. So I am a software developer turned fund manager. It is not the traditional path I have learned. Everyone kind of tilts their head like a confused dog when I tell them what I'm doing. But, I think my eyes come at it from a technical perspective. Not that I need to understand how all the blockchains and everything work, but it gives me a different lens at it. And that's basically how I started getting interested in crypto, from really the use of crypto in cross-border payments. That was the first use case that I got interested in. The previous business I had, we did a lot of credit card processing. So I was kind of already touching that market a little bit. And it kind of just led me down the rabbit hole that has become the crypto fund. So my fund focuses specifically on cryptos that look to or are solving commercial problems, specifically in cross-border payments, trade finance, supply chain management, and generally tokenization. Incredibly unsexy topics. And it's to the point of your whole podcast here. It is the early days. And I think that, what I'm looking for, and I think what really starts to unlock a lot of this value, is we have to have regulations in the United States. The rest of the world is kind of starting to get its act together. The US is just trying every wrong solution before it tries the right solution. So here we are.
Robert, could you define trade finance?
Yes, yes. So trade finance is basically the trading of goods across borders,
Okay.
international borders. You could think of it as, some company in the United States is buying products from China. They need to get those products from the manufacturer in China. It comes typically across a container on a boat and hits the shore. That whole process is largely still done in paper, unless you're just a gigantic organization, say like Amazon or something, bringing their own products in. The market, well, that market in particular has the opportunity to make a huge technology leap, because going from paper to digital and then jumping right into to crypto is kind of in some ways crazy, but it makes a lot of sense, because the financing of that trade, like who's paying for stuff at what point along the way, is a very sticky process and really cumbersome and hard to do for the small, mom and pop effectively.
Right.
And crypto can kind of allow that to be a little more democratized.
Got it. Appreciate you expanding on that.
Hmm.
Well, I guess when you say that crypto can make it more democratized, that's like that word is
Hmm.
even kind of um,
It's loaded.
a buzzword. Yeah, it's
Yeah.
in crypto. It's kind of like a buzzword. It's like we're
Hmm.
democratizing everything, right? Um,
Yeah.
but we're democratizing casinos. So, like in the context you can use trade finance, but like what
Hmm.
what does that word
Is it just
democratization?
the accessibility of it, or
Yeah. I think accessibility a lot of times is a better word to use, but that in itself has a lot of confusion around it.
okay.
But yes, making it where you don't have to have people giving you permission in a lot of ways, right? Like you get to participate in these networks if you want to be able to support them effectively, right? It's not like you have to have an accreditation or a certification of any kind. If you want to hold the token or if you want to run a node, you kind of generally get to do it. There's some cases where that's not the case, but it's generally the rule of thumb is it's open. Um, and there's pluses and minuses to that. You end up with people trying to run, a server node in some of these networks that honestly can't even keep their desktop running in good order. There's no way that they're up to speed on running a infrastructure. So it cuts both ways.
The regulation that you said is a necessity in the U.S. for the stuff to take off. Do you believe that regulation and that sort of accessibility for anyone to participate can actually go hand in hand? I know that's kind of a big concern on my side, is that with the regulation comes these KYC requirements. It comes with, all these other ways where you have to identify yourself and become compliant in these regulations. You would have to have some sort of way for enforcement to take place, I would imagine.
Yeah, it's a great question. I think that when regulations come, some form of identity is mandated, good or bad. So that's going to exclude some parts of the world. I don't know how identity becomes a cross-border thing. Like it's not just a U.S. identity; it becomes a blockchain identity.
Right.
That problem, I think, I know there's teams trying to solve it, but that's likely going to have to come from the states. It's not, or not states, from the governments. It's not going to come from some YC startup that's decided they wanted to do identity, like
Right.
as much as they would like to see that happen. I think that if you take my opinion, KYC and AML is broken really bad in the U.S. It came out of the Patriot Act. It should have never morphed into what it is. It does more harm than it does good. And then we're going to try to mix that in on a blockchain, and then recipe for just confusion and utter, disaster in some sense. But you're right. There does need to be able to be enforced things. As much as blockchain is anonymous right now, it's not. That's a big misnomer. The FBI says repeatedly that they love it when criminals effectively use the blockchain because their trails can't be erased, and the software out there, chain analysis and different things, really can kind of take the crumbs and build the trail backwards effectively to find the identities.
Right. No, one thing that Phil and I have been talking about internally is, I guess to stay kind of on the same subject, is how much of crypto's use cases is this kind of regulatory circumvention? Like how much of it being more efficient is just that these rules aren't in place? And then once these rules are in place, how can you be certain, or at least have some confidence that like the new system with the rules in place on this blockchain, back end is more efficient or effective than just kind of cleaning up what we already had? Like if we took all the investment and all the manpower, developer resources going into blockchain, if we had just put those into tidying up existing systems and coming up with, trade financing systems that were not just paper, is the crypto token blockchain component valuable in itself there, or is it just because currently the regulations don't exist, so it's a little bit, the rails are a little bit more lubricated than the friction that we get from regulations?
Yeah, it's a tough question. Immediately, the lens you're getting this through is me, and it's going to be a big yes that it is needed. It's not just that it's needed. I think it actually is a good technology solution. There's plenty of blockchains out there that are a hammer looking for a nail that are absolute trash. Admittedly, the vast majority of the 20,000 tokens out there are trash, 99% of them. But you start to see why is a token useful? Well, there's some stuff on our list here we can kind of jump to, but like it allows, for instance, you can tokenize an investment fund. That is not an efficient process right now because, you have to have all the legal paperwork and all that stuff. And typically it's reserved for accredited or greater investors, right? Just because no one wants the headache of all the paperwork. Well, in a blockchain world where things can be more streamlined from a digital perspective, you can allow someone to buy a slice that is a fraction of a percent if you want to. And I think that you start to see that happen. And then like, what is the use case of tokenizing a fund? Well, typically that's an illiquid asset. You start to create markets around things that didn't happen before or were inefficient.
Yeah, I think the challenge that I've had, and Dalton, maybe you share this, is that when it comes to tokenizing some of these real world assets, is like whether that's like, say it's a fund vehicle or something like this. It's like, okay, I'm told that there are back office efficiencies, like efficiency gains that come from this.
Yes.
But then I sort of end up wondering, like, if at the end of the day, that fund vehicle needs to be, centrally custodied, basically,
Hmm.
as a line item, just monitored by a centralized entity.
Okay.
Why couldn't you just create like a secondary market platform for fund vehicles? Why wouldn't that be sort of like just as useful? Because it's like, if you tokenize that asset, really the gains that I feel like you get in the blockchain world that come from using that
Hmm.
tokenized asset usually come from sort of the composability that blockchain, the DeFi unlocks,
Hmm.
right? Being able to use, like, it's like you have this fund vehicle, now you can use it as collateral or something like this, right?
Exactly. Yep.
Yeah, yeah.
Yeah.
But I guess, just to finish that thought, but
Yep.
then it's like, will regulators let that happen? Like,
Right.
is that a realistic
Yeah,
outcome?
especially when you talk
It,
about the accredited investor thing, like
mhm.
it's not necessarily the fund manager that cares as much about the accredited investor on their own. It's there's
It's the regulators.
restrictions.
Yeah.
Right, exactly.
Yeah.
And
It,
you talked about tokenizing funds, Phil, and kind of liquidity there in second market. Well, we have exchange traded funds now that
mhm.
already have a pretty liquid way to not necessarily hedge fund vehicles as much, but these ETFs are swapping pretty well on existing exchanges.
Yeah.
Yeah, yeah. If
You,
anything,
you,
the ETF market's growing at the moment.
Right,
It's
right.
yeah, yeah.
yeah, for sure. Yeah, I think that, you touched on it briefly there, Phil, is the idea that you can use your assets that are tokenized as collateral in other situations.
Mhm.
Like you, for all intents and purposes, it's not possible to take your ownership in a hedge fund
Yeah.
and use that as collateral anywhere else, right?
So funds can be used as collateral by like large
Hmm.
allocators.
Right.
So they can have a relationship, say, with a prime broker,
Right.
and then they can say to that prime broker, "Hey, we've got with Bank of New York Mellon or whatever this fund
Hmm.
investment. They're going to let you know that we're good. That this is not a
Right.
lie or whatever." And then that prime broker will then extend leverage against that
Hmm.
fund investment. This is something that happens now.
Right.
And so, like, large allocators, have that infrastructure set up right now to
Hmm.
do that. Um, it, so I guess, like, to me, it seems like, okay, one, the gains are going to come from if that function. Okay, so tokenization, let's say, makes that easier. Is it like 10x easier? I don't know. I'm not sure. Maybe you can answer that question. But then
Yeah.
it seems like then the gains have to come from, like, now you can have new participants doing that.
I think that's more of it, right? It's more participants and it's a 24/7 clock, 365. So there's, and not to say that you couldn't turn that other market into it if you applied more technology. That's certainly the case. But I don't think that, you know, the processes that all these other institutions have in place they're going to feel comfortable allowing somebody at a Sunday morning at 8 o'clock, to be
Yeah,
doing part of this, right?
sure.
Um, so you have that. And I think it's more so bringing more people into the market or allowing more, the access to, you can make the case that the unaccredited investor may be more emotionally invested and they are making poor decisions. I think that's why you hear this accredited, unaccredited stuff so much. I think personally that whole system needs reworked. The numbers don't make sense why people can or can't be in it. Just because somebody can pass a test doesn't mean they're a good investor necessarily. So it's funky, and it's not inflation adjusted the number. So here we are.
Yeah, so even by their own logic, it doesn't even
Yes,
really apply to
yes,
them. Yeah.
yeah, yeah. So that's a soapbox topic for me for another day. But I think that kind of like I said early on, democratization, right? Allowing access, accessibility. I think this is just another example of unlocking value, and not that it's going to solve all the world's problems. That's certainly not the case. But it's early days, and it's early days for all this stuff. As much as we've been in crypto. I don't know how long you guys have been in crypto, but I've been in it since early 2018. And I've seen such a change. And there's days I feel like things are moving so slowly. Then I kind of like remind myself to zoom out a little bit and be like, oh my gosh, look how far we've come. And I look forward to the day that we actually have regulation in the US. And I think that will unlock it for the rest of the world, really. Being the financial center of the world, we're just in some ways hindering so much progress that could be happening. And hopefully we get politicians with their heads screwed on straight here, that help us solve that. So
Yeah, yeah. Well, I mean, my intro to the space was roughly the same time as you. It was kind of, but it was kind of like 2016. But it was really
Hmm.
around. I was more interested in like these inefficiencies in the space. So it was like
Hmm.
my first intro was there's this exchange Bitfinex.
Hmm.
I had opened up an account on there like I don't know 2015 or something like this, and then just kind of forgot about it. Never did anything with it, right?
Hmm.
And then they got hacked. Because of that hack, then U.S. Regulators started to sort of crack down on them, and then they stopped allowing U.S. persons to open accounts on Bitfinex.
Right.
But if you already had an account, you were grandfathered in, and so they had this
Yeah.
this peer to peer lending market on there
Hmm.
where. Once they turned off the spigots for one, we started entering into a bull market, kind of like I guess this is
Hmm.
like mid 2016 or
27.
so,
Okay.
and that was sort of like the first beginnings of it. So we entered into that, and then two, they stopped allowing U.S. investors onto the platform. So there was kind of like a little bit of a liquidity problem. So it was
Hmm.
like if you could get assets onto the platform and then lend in that peer-to-peer market, it was these exorbitant interest rates, right?
Yeah.
And sort of was just being a liquidity provider for leveraged traders, and so that was my intro into the
Hmm.
space. Just like these weird inefficiencies that
Yeah.
exist, and I'm even a Dawn and I had this conversation recently about Bitcoin and its place as a hedge in the portfolio. I'm a buyer of the idea that Bitcoin is a hedge against true stress scenarios, like at the sovereign
Okay.
level.
Yeah.
I think there's good reason to think that.
Okay.
Dalton, he takes kind of like the other side of that coin, but
Hmm.
uh, I mean, I think like really the challenge, and I guess this is where like I'm going to kind of push you a little bit, Robert. To get you to flesh it out a little more, is that when it comes to the things that we're talking about, like the yes, it's early days, so that caveat,
Hmm.
but like where are we actually seeing this stuff being
Use.
used
Yeah.
by not just crypto? Because there are a lot of products that
Hmm.
are crypto products servicing crypto.
Right.
Right, but
Yeah. That
it's
doesn't
hard.
count. Yeah.
Well, I mean, it's something. It's not nothing, right? It's not nothing,
Right.
but it's like we kind of need external dollars to flow into the ecosystem, or else eventually this whole thing kind of
Hmm.
like implodes, and then we have a trading universe of five assets or something like this.
Right. Yeah. Yeah, so I think that we can go multiple ways with this, but I think the first one that actually is not even in the notes is, Polymarket. I know we've talked about a little bit about this. Like, there's an example of crypto being used, whether it's being manipulated or not. Who knows? Set that aside. But there's a betting market that's based upon smart contract. Um, so you have that. Another case that's actual physical devices. You had emailed me about this one that didn't even make it on my notes, but is a great use case is Helium. So Helium, for those that don't know, is a network that is based upon having physical devices all throughout the world, but effectively the U.S. right now, I believe. And it's all about providing internet to IoT devices, so low power devices that don't necessarily need high bandwidth. So think about it as like a river gauge to figure out how the water is, weather gauges out in the middle of nowhere, different things like that. So these helium antennas and devices, excuse me, um, provide so they hook up to a traditional internet connection and then they broadcast it over like radio frequency that is rather slow. I mean, we wouldn't even be able to browse the internet on it, for instance. But it's an example of if you're an operator of that node slash antenna, you are in a certain area and they have them as I think octagon shapes for whatever reason, but they on the map, and then you're in that space, and anybody using bandwidth from you in that space, you get paid in tokens. Their Helium token runs on the Solana blockchain, good or bad, but it's there, and it's very early days. They've done trials with T-Mobile. I haven't seen too much from that. I don't know if you guys have run across anything, but it's fascinating. I've got this antenna hanging off my gazebo, and it ends up being a conversation piece when we have people over, and they're like, "What is that?" I'm like, "Well, are you ready for a short conversation here about something you don't care about?" So,
Yeah, I think Phil was the one that introduced me to Helium a couple of years ago. And I don't remember seeing, I mean, obviously the T-Mobile thing's an interesting development, but I guess in my mind, I'm thinking if I've got this river gauge or I'm trying to monitor all these things, and I'm close enough to a guy with Ethernet, or I've got Ethernet, like why not just have like a
Uh,
normal router at that place? Yeah.
it's not that close. So the idea is, like for my house in Smyrna, I think that depending on hills and trees and all that other stuff, I think it has like a 2 or 3 mile range,
Oh,
something
wow.
like that. So
Wow.
it's like
Good.
well beyond, and the antennas can be different powers, so they can go different. And if you're on top of a building, people that have been able to put, I know there's some guys that put some antennas on top of buildings down in downtown Atlanta, and they get amazing coverage, like 30 something miles. Because part of the network is you have to prove where you're at, and that's part of their system, proof of location, I think is what they call it. And the different nodes will talk to each other, and they can understand by reporting, and they start to build this graph together to help understand, like, oh, this person says they're here, but no, they're actually in India. Like, there was a lot of fraud early on because the token was getting handed out so much just by having antennas, and they've kind of worked their way through kind of alleviating that kind of fraud in the system. So,
Got it. Oh, that's pretty cool.
but yeah,
I didn't realize the range was
it
so
is
big.
cool. Yeah, I mean, and again, it goes back to antennas. It goes back to the topography. There's a lot of factors, but it's more than just putting a Wi-Fi booster on your Wi-Fi at your house.
Right.
So,
Right.
yeah.
Seeing pretty good cash flow there, Robert, from the Helium antenna.
I have not. I admittedly haven't even looked at it in forever. Much like all of crypto, for the most part, it's way down from its high.
Right.
That token once was trading at $50 something a token. It's like six now. To me, it's just more of like the curiosity of it. If I make some money off of it long term, great. But it's not something that
Right.
I have high hopes for at this point. So,
Gotcha.
Yeah. So, any other examples? Any other that you can rattle off?
yeah. So we, there's tokenization is a topic that is very broad. So you can have tokenization of digital things, like tokenization of an investment fund, like we've talked about. You also have tokenization of car titles as an example. Recently, California, the DMV, put 42 million car titles on a blockchain. I was like, they're generally a technology forward state. I would have not figured that one of the biggest states in the country would have been the first to do this, but excuse me, 42 million titles. The idea is you're gonna be able to manage your title through an app that they launched. You'll be able to transfer ownership, which is pretty crazy. I was talking to someone about this article offline, and it was interesting because it was like, is this a positive or a negative? And generally, I think it's a positive, but there's some very negatives about it. Like, does it make it easier for people to go pawn their car titles?
Mm.
That's generally a bad financial decision. Maybe last minute you kind of need that funds, but like it can become so much easier to do and like spur of the moment. And then you get in these high interest rate situations. So, much of this stuff cuts both ways, and the markets really haven't figured it out yet. But so car titles are there. House deeds, I think. Go ahead.
Sorry for the car titles thing. Is the blockchain record, is that being used as a source of truth, or is that being like backed up into a traditional system?
My guess is they're running two systems side by side. I cannot imagine that they turned off their traditional database for car titles.
Right.
I think that future will come.
Right.
Yeah, I think maybe they're running them side by side. I didn't see those details, but it would be irresponsible of them, I would say, at this point, to have everything on a blockchain.
Yeah,
especially considering. Yeah,
I was going to say I don't know enough about car titles, but I'd be curious how that works with like interstate car title, car sales and things like that.
Transfer. My guess is, and I don't know this exact detail, but like if you're going to be transferring your title from California to another state, you're probably going to have to go in the app, say, I need a paper copy sent to me, and then you're back in the old system until other states catch on.
Got it.
And not that this is blockchain, but it starts to overlap in the same world. Is we had talked about identity a bit ago. So Georgia is one of, I think, 7 or 8 states now that allows you to have your driver's license in your Apple Wallet. I don't know if they do Android or not, but it's supposed to only work at TSA right now at the airports, in like 5 airports in the country. So it's super early, obviously. But you start to get accrediting organizations effectively putting identity on a blockchain, and you start to be able to use it in other ways. just for kicks, if I'm out, say I'm at a liquor store and I'm buying something, I will try to use that. And it's more of a, they've never seen it before. So then I probably quickly pull the old one out.
Sure.
But it's a bit of an education thing. And you start to see this, it's creeping up in places that you probably wouldn't expect. I would have never expected Georgia to be one of the first 10. Um, and then you obviously have this thing in California where it's a little more obvious, but I think where it becomes really useful, you start to think of these real world assets being tokenized, is house titles, house deeds, excuse me, or anything with a deed, because it's a lot of value that's locked, and it's hard to fractionalize. You have to put a LLC around it, and or some business structure. And at the end of the day, if the three of us, three or say 15 friends, want to go buy a house together, it's like not really possible today, right? I mean, it is, but it's just too much of a headache.
Right.
You start to be able to fractionalize the revenue. Say you're buying a rental, you can fractionalize the revenue stream off of that. You can have smart contracts divvying up the money, because they say it's not an even 15 person split, so it gets complicated. It adds transparency. And, at the end of the day, this seems like a silly example, I'm sure, but different parts of the house are worth different amounts. You could own different parts of the house versus owning a sliver of the whole house, if that makes
That's
sense.
cool.
Yeah. So it's
Yeah,
early.
but again, I mean, it's like with that sort of example, it's like, I guess my challenge is trying to think about the sci-fi world where it's like, okay,
Hmm.
why is a blockchain the thing that's needed to do that? Like, why can't,
Hmm.
if that deed needs to be custodied by a central entity, why couldn't you have just like the secondary market? And why would
Hmm.
that not be actually more efficient than the blockchain
Yeah.
world?
I think that it's fair. I think at the end of the day, we live in a world that has less and less trust in generally everything. And it's an interesting moment in time for blockchain to be appearing, because you don't need any trust really outside of, you just trust the system's not going to change on you because the code is public. And I guess for most people, they would never be able to understand that, but it adds a layer of, um, it starts to take out the middleman. And I think people in some sense are tired of feeling like there's a middleman with everything in life. And this is a common middleman, if anything. So,
Yeah, actually, it's something that just came to mind in the midst of our conversation here, going back to tokenization of just fund vehicles,
hmm.
right? There's this idea. I don't know if you've heard of portable alpha, but
No, I've not.
portable alpha. This is like you say you want hedge fund exposure, but
Hmm.
you don't want to give up your equity exposure. So it's like,
Interesting.
well, how can I do this? Well, I can own a hedge
Hmm.
fund, and then I can go buy, let's say, equity futures. So because I don't need much cash to do that, or if you're one of
Right.
these institutions that we talked about earlier, then you can go get,
Hmm.
you know,
A credit line.
a credit line from a prime
Hmm.
broker, and because they're comfortable with you as a counterparty and that sort of thing. But you could so right now actually there's this sort of, it seems like relatively nascent but growing quickly industry of portable alpha products for more like private wealth and really for like retail at the end of the day, because these are
Hmm.
like delivered through ETF products and this sort of thing.
Okay.
And I think like the challenges with those ETF products, to me at least, are that you end up using futures to deliver that return stream. So say it's like, okay, you're going to
Hmm.
have this hedge fund strategy like a CTA. This is like a traditional, like a trend following strategy or something like this, where they're trading global
Hmm.
futures. Okay, so that's pretty cash efficient. Let's say to get your exposure, you only need like you put $100 down. Well, only $20 of that is actually going to be used for margin on those futures, and then you're going to
Right.
take another whatever $20 for buying equity futures on top of that. So it's
Hmm.
like you're getting your equities plus your hedge fund exposure, and then you get that in one product, which is very cash efficient. So that's great from a cash efficiency perspective, but from a tax perspective, it actually sucks, right? Because you have these short-term gains that you're realizing on your um, equity futures, right? That you're earning.
Hmm.
So you're it's
Right.
always a short-term gain. Maybe there's some nuances there in like terms of how it works with an ETF that I'm not aware of. Like
Hmm.
how taxes are realized on an ETF P&L. I'm not sure,
Right.
but you really could imagine with tokens if you have a you could actually take the entire stack of returns that exist in the fund vehicle, and each little part of them can be tokenized. And then what that actually unlocks is that you could then be charging fees like appropriately along the stack. So it's like with a hedge fund vehicle, let's say, like typically you would say like, okay, you're only going to be paid a performance fee in excess of the 3-month T-bill, right? In
Okay.
excess
Yep.
of the cash return. And so then you monitor that rate and whatnot. But then with a tokenized version, it's like, okay, you can just own $100, let's say, of the tokenized T-bill. That then is you put into some kind of thing that allows that to be used as collateral for the trading strategy. Now you have this trading strategy P&L that's just where you're just netting those realized P&Ls from that trading strategy
Right.
against that tokenized T-bill. And now to that hedge fund manager, you don't even have to. You just charge them you just pay them on the P&L. You don't even have to worry about calculating
Right.
the T-bill rate. And then it's, let's say you want the equity return on top of this, right? Well, instead of owning T-bills, you own S&P 500 token, right?
Right.
And then you're putting the trading strategy directly on top of that. So I don't know, that just, I wanted to bring that up because that came to mind as someone who, my background is in alternative investment vehicles and hedge funds.
Right.
And thinking about how can you like efficiently get all these return streams together into like a cash efficient vehicle. That does make a lot of sense to me, especially when it comes to thinking about a world where private wealth, retail folks end up wanting access to that style investment product.
Right. Yeah. I mean, it just, this is certainly your world more than my world, but I think that it's at the end of the day, you're starting to break things apart into smaller pieces that are less complex, even though as a whole it may appear more complex.
Sure.
You're able to compartmentalize it and make it almost like Legos, where you can build your own strategy because you have these smaller pieces that you can use that are a little more nimble.
Right.
So,
And yeah, and I guess like just what I want to reiterate is that is already a concept happening now in traditional
Oh,
finance.
okay.
It's just well, like I said before, it's like how you can go to your prime broker, you can say I've got this
Oh,
fund
right,
over
right, right.
here. So that concept exists now. It's just it requires sort of this huge paper trail and all this sort of like this potentially complex web of counterparties to deliver this, right? And so in the tokenized world, yeah, it's okay. It's like I can, imagine how that, like, you don't have to have the agreements, right? You just own the token. You don't have
Right.
to worry about what's going on over there with.
But that would only work for something that's fairly liquid, so that you can get a true price for it if you're putting
I
it for
mean, well,
collateral, right?
at the end of the day, anybody can do anything they want with any piece of collateral, right?
Right.
Like, ideally, it would be a more liquid
Yeah.
thing, right? Because you don't want to have a liquidity crisis
Right.
if you're leveraging your home to go get portable alpha on
Right.
top of your your dining room
Yeah.
as
Yeah. Yeah.
your collateral.
Well, I'm even thinking from if you're looking at a programmatic way of providing collateral, you've got to have a programmatic way of valuing that collateral. So there'd have to be some sort of efficient market in order to price that, right?
Yeah, but I mean, like, now you already have, I mean, this sort of thing exists now.
Right.
I mean, like, it's like going back to the houses, right?
Right.
Like, you have third party appraisers,
Right.
right? Who will appraise the value of the home, and then that will be an effective mark price for the bank to then
Right.
extend a credit
Yeah.
line on that home. So it's like we have these concepts already.
Right.
We sort of like have some concepts for this. It's but yeah, I mean, like with the
Yeah.
there are definitely, I hear you, there are definitely challenges when it comes to like okay, if there are problems with marking the price of these assets, why then would a blockchain unlock the value on
Right.
top of that?
Well, I guess right now you've got these like urn products where you're essentially in a managed fund when you're
Yeah,
buying
and
this.
Yearn, I guess for background, it's like a strategy management protocol, a decentralized finance.
Right. So you can
yield
buy into these strategies, and you have a token that represents your share in the strategy,
Yeah.
and those tokens trade at a price.
Yep.
So I guess it'd be no different than putting that up.
So it'd be interesting to get your guys' opinion on this. So if the entire equities market was tokenized, like that was the system of record. Would it solve the issues of naked shorting and all these other things where people are like basically selling shares and others, like this world where you can sell something you don't own and there's 15x or whatever you choose the number there to be of the shares outstanding, like the whole GME thing, right? Would that have happened in a tokenized world?
So, I mean, you can always have products like a swap style product, which
Okay.
is like a swap product is just going to reference a price on something. And then you
Hmm.
have an agreement between two counterparties where you're going to say, okay, here's our reference price. And
Okay.
we are going to, at, some, ending period, we are going to swap cash flows between one another based on that reference
Gotcha.
price. And we're never going to touch it. We're
Okay.
never going to touch that thing. So there are mechanisms that, exist, derivative products that exist now to, yeah, okay, sure. You're not messing with the spot asset. In that case, you're
Hmm.
not having to borrow, you're not having to locate borrow necessarily, but there already
Right.
there already are sort of
Yeah,
like
but you could
mechanisms to
short
get
the
around.
perps on Bitcoin without holding any
Yeah,
Bitcoin.
so right now, like the majority of trading volume in crypto is not on the spot market. The
Right.
vast
Yeah.
majority are on the perpetual swaps, which are exactly that. It's just a product that says like, okay, we're going to look across all these exchanges. What's the average price of Bitcoin across all these exchanges? That's our reference price. Every um, uh, X amount of time. Usually it's every 8 hours. In the case of perpetual swaps, we're going to tack down what's that
Reset the
current price
price.
of that reference index, and
Yeah.
then there's a funding rate that is swapped between the longs and the shorts on perpetual swaps. But
Hmm.
really the perpetual swaps at the end of the day function with their own order book effectively, right? Because like people are just trading, like that reference price only exists for settling the funding
Right.
charges. It doesn't exist
Okay.
for like settling the cash swap based on that underlying uh,
Interesting.
like the
Okay.
P&L of the asset. Yeah. I guess we can stick on the topic of tokenization for just a little bit more, Robert. I'd like to get your
Yep.
opinion. So do do the blockchains that exist now actually benefit from tokenization? Like, does
Hmm.
Ethereum or some layer two or Solana or one of these, if the tokenization comes on top of these platforms, are there economics that actually end up accruing to the, let's say, like the layer one or the layer two?
You mean like specifically
Yeah.
real world asset tokenization, or?
Uh, yeah, real world asset tokenization or yeah, exactly.
Yeah. I mean, I think that you could say it's a mixed bag. So when California tokenized the car titles on,
That's
I
on
think it
Avalanche, right?
was Avalanche. Yeah, I'm not sure that actually helped Avalanche. I mean, where it starts helping them is it gives them a news article that they could post that says people are using us. Right. That's the value right now. You start getting in other use cases where like for instance, there's two or three cases that I know of where U.S. T-bills have been tokenized on a blockchain. So that's not a physical asset, but close enough. And you start to see that those kind of things are more likely to be able to use as collateral on that blockchain, right? So it's not necessarily like if somebody bought $1 million worth of T-bills that brought $1 million into whatever blockchain it was, but it allows that kind of, this, not to be saying that everyone should be always levered up, but it allows for that.
Mhm.
So I think that's the value that you see these days. I keep going back to it. Not this is not to be like a. I'm trying to run away from your question, but like it's early, and like I think all this experimentation needs to happen to figure out what needs to. This is no different than the internet in the mid to late '90s.
Right.
Um, and I tell people like especially with the strategy that I use or that I employ, like a lot of times we're buying tokens that aren't really used that much yet, but there's the promise of it. And if you think about a blockchain as like a railroad, a lot of the track is being laid, but like how do you get value out of that? Well, you're betting on that people want to move things eventually on that blockchain and do things with it. So the tokens are individual train cars. Those train cars could someday move something, and you want to own those cars.
Yeah,
Is a way to
and
kind of make an analogy.
I really like the railroad example because
Yeah.
it's uh, this is something that I posted about this maybe it was like 2 months ago or something like this. But historically, like a lot of railroad investments went really, really badly
Yes.
for the people who invested in the actual railroad
Yes.
infrastructure itself, like the actual tracks,
Yeah.
and whatever that was, like whether that's purchasing the land or
Hmm.
whatever, like the laying of the tracks itself. Um, and I do wonder if there's some of that with like the layer ones now, right? Where it's like there's been this massive, potentially a massive overinvestment in um, layer one and layer twos, to lay that infrastructure. I mean, that's my
Yeah.
hunch right now.
I mean, it's definitely
Hmm.
easier to spin up a new layer 1 or 2 than it is to build, cross country rail infrastructure.
Yeah, sure, but it's kind of it's. I mean, yeah, the layer one, layer two is it's pretty darn analogous to a
Yeah,
railroad
I'm just
track.
saying that. I'm just
Yeah.
saying, like, from a
Yeah.
competition standpoint, it's a lot easier
Yeah.
to create a new layer 1, layer 2 that's now fighting for now they're fighting for, Georgia's DMV to put their car titles
Hmm.
on. So they've got a story, as opposed to with
Yeah,
the railroads, like you have to have pretty sophisticated infrastructure. Like it's tough to compete
Yeah.
in. Whereas in the layer 1, layer 2s, it's a lot easier to spin something up.
Yeah. To use another analogy, because sometimes people don't get the train car analogy, um, is I will say, okay, rewind to the late 90s, and you say you wanted to invest, you wanted to be part of this new internet thing. What were you going to do? You're going to buy AOL stock, you're going to buy Cisco stock, you're going to buy people that were already doing things on the internet and hoping that, the internet did what, grew like you thought it was going to grow. In a blockchain world, you have the ability to be able to buy into the actual infrastructure itself. You're not buying a Cisco router, you're buying into the fiber effectively, in
The
like the
actual pipe.
capacity. So it's another layer down. And to your point about you could easily start at L1 or L2, I think that there's been a tremendous amount of overbuilding in the L2 market. It's super easy to spin one of those up and put some branding on it. And I guess in some sense in L1, but that takes more effort, to be able to be different and efficient. And I think that, as especially these like Gen 2 or Gen 3 L1s that are out, they're not your Ethereum anymore. They're so much more efficient. Admittedly, they have more of a marketing problem, and they're fighting someone that has been around since 2017, and the networks built up around them. So it's a challenge, but I think that at the end of the day, the the well, I have trouble seeing, and this is a very non-traditional opinion here. I have trouble seeing Ethereum having enough escape velocity to be around long term. I think it's more of a Yahoo than it is a Google.
okay.
Um, it's got to figure out its scaling problems, and its scaling problems are not adding more L2s.
I've had
That's
that same
this.
conversation for sure with other people that are deep in this space. There's a lot of people that really love Ethereum, and I understand that it was early,
Yes.
but I'm kind of the same as you. Is like, and even when you start to look at the new feature rollouts and things that just try to make things a little bit easier for L2s, and it's just like, oh,
Hmm.
you're adding a bunch of weird stuff in here into Ethereum just to
Hmm.
make it work as well as the stuff you could build from scratch. And if you have enough VC money to
Right.
airdrop people to use it, like they're going to
Yeah.
switch. Like,
Yeah. Yeah. It's I often try to use the analogy for Ethereum as is one of those houses where somebody built a small cabin initially, then they've added rooms on all over the place, and
right,
then you like 20 years later you look back and nothing makes sense.
right.
I think that's not to be mean to Ethereum, but I think that that's kind of the direction they're headed. So
Yeah, you started out with like a double wide trailer, and now you've got this
yeah.
palatial estate, but it's
Yeah.
you're better off just buying a new house.
Yep. Yep. So um, maybe kind of switching topics a little bit here. So another use case of crypto, that you're kind of seeing happen in different ways. So cross-border payments, there's the retail side of that and there's the commercial side of that. So retail is Western Union, MoneyGram, that kind of stuff. Traditionally, you're sending money from an affluent country to a non-affluent country to family members that are back home effectively. That is, it's been in place. Those MoneyGram and Western Union make a tremendous amount of money off of fees. You're looking anywhere from 10 to 20% of what you're trying to send back is the fee. It's just insane. The people that functionally can't afford that are the ones having to pay it,
Right.
because there's no other
Yeah.
option. You're starting to see them in some cases have software wallets on a phone. In some cases, using stable coins to send back. So in the receiving country, they need to have the ability to change that likely from a stablecoin back into some local currency. But you're seeing that. You're seeing more of that, admittedly, with USDC, from what I've read, than you are seeing it with Tether. It obviously can happen with both, but it is a sliver of the use case of cross-border payments.
Yeah.
The bigger one, I'm sorry, go ahead.
I was just going to say what you're talking about, like the remittance thing, like that is,
Yes.
that's the most promising thing I've seen so far personally, just because when you look at some of these, you look at Mexico or India, some of these places where they have a high level of remittance out of the US.
Yep.
If you're trying to send your mom in India $200 and you got to pay $35 in fees,
Hmm.
that's a wild number that's getting taken out of that money. That would be, I mean, obviously, as a U.S. citizen, keep it all in the U.S. would be my preference. But if you're sending money
Yeah.
to your mom in India, like
Yeah.
she'd rather have the $200 than the 165. And when you look at
And
that as a percentage added to
yeah.
the remittance income of these countries, it's significant.
Right. And Italy, you also want her to have the $200. Just
Right, yeah,
everybody except for
exactly.
Western Union. Like,
Yeah,
there's no argument there. So yeah, it's for the longest time, well, if you rewind into like 2018 to 2020, like you didn't hear too much about this stablecoin being used in this use case. It's almost like people didn't even think about it because it would have happened. It could have happened. Um, but you're starting to hear, or back then you were hearing more about, the XRP Ripple use case. I mean, that's the biggest example that I would have, but where they would take dollars here locally. Their system would buy XRP. You would transfer the XRP, and it would get moved into whatever secondary currency would be on the other end. And you know, all the drama that's around Ripple and XRP. It is what it is. But I think that Ripple is more focused. They've done some work on the retail side, but it's more focused on the commercial side. And that's where the payment volumes are so much larger. They're much bigger payments,
right.
but even the frequency of payments are higher than what retail would be. So, that is cross-border payments can be broken apart in those two pieces. And, you can make the case that sometimes, because this starts to bleed into a stablecoin slash CBDC world. And we can have that whole conversation if we want to, but like, I personally don't believe the US is ever going to have a one size fits all CBDC. I think we would potentially have one that's a commercial layer and one that's a retail layer. The stablecoins probably act as that retail layer. And then you end up with one that's probably more commercial focused, much how our banking system works now, that does settlement at that other layer. And then you start wondering, okay, how do you settle that into other currencies? And that's where I think whether it's XRP or a different other token could be involved in that kind of marketplace. So,
And so now XRP, in that example, as it settles into other currencies, I mean, at the end of the day, there's I guess, a market maker who's required on the other side of that transaction, right?
yes, and that can be done in a couple different ways in the XRP case. So the traditional, like, be on an exchange, they're bringing a market together there, or about 6 months ago, maybe approaching a year, on the XRP ledger, there's a built-in automated market maker as part
Okay.
of the platform.
Hmm.
Um, so, it functions all the same way. And I think that Ripple is the one that introduced that amendment to the network for the automated market maker. And if you start watching what they try to contribute to the network, versus what others try to contribute, you see a very different strategy. So the XRP network is in a bit of a tug of war of sorts, where Ripple's trying to take it the way of their business ambitions and whatever they may be, and then you have the more retail focused on the other side. So it's
Interesting.
a
Yeah. Um, to me, the other side of that coin, or like another way to solve that with like existing infrastructure now, could be stablecoins on a layer two. Maybe your answer is the layer twos just aren't fast enough, but say eventually we get a
it can
fast enough
be.
layer two, or yeah,
Hmm.
exactly, we get a Solana, something like. But
Yeah.
Curve Finance, right, the decentralized
Hmm.
exchange, which is made to sort of swap like to like products. It uses a different sort of pricing curve
Sure.
relative to other DeFi products, so it's like you can minimize slippage a little bit
Hmm.
more. Um,
Okay.
but uh, I think there was this paper that was released. It was kind of, gosh, maybe like 2022 or something like this. But somebody, I want to say at the World Bank or like the IMF or something like this, wrote this paper. Maybe this was like an intern who wrote it. I have no clue. But it was this paper saying like, oh, could Curve be used for international settlement, right? So it's like you could have
Mhm.
this, you could have the pool with USD stablecoin and JPY stablecoin and sort of like a
Yeah.
whole basket of all these things, and then you can just swap in and out of these. So somebody has to sit there and take that liquidity or the risk of just that basket, right? That's
Mhm.
that's the way it would
Yeah.
work, and maybe that's like not. Maybe it turns out like you know market makers don't want to be exposed to that, And,
Yeah. Yeah.
but yeah. Anyway,
I guess back to the Ripple, and maybe this is just me being somewhat naive as a U.S. citizen. Like, I care about dollars, and
Mhm.
not necessarily understanding why I would want to hop through Ripple as opposed to just sending the dollars. I guess I could see if I was in
Yeah.
another country, and then maybe there wasn't a liquid market between
Mhm.
currency A and currency B, but the Ripple intermediary solved for that. But it just seems
Yeah.
like that's an extra step that might be unnecessary as opposed to just using
Yeah.
dollars.
Yeah. So this is probably going to seem like I'm putting on a Ripple sales hat here, but bear with me for a minute.
That's good.
Um, so the way that they would answer that question is they're contrasting their technology solution against Swift. Swift is the international wire system that's
Right.
been built in the 70s and largely hasn't been updated. Okay. 6% of international wires go missing on a daily basis that require human input to figure out where the money went. That's a problem. Um, the average international wire, unless you're in like a euro US dollar corridor or something like that, is going to take a number of days.
Right.
You hear 2 to 5 days. You can even be longer, up to 8 days if it's something very remote. I don't know if it's like Zimbabwe or something crazy. So, um, and the fees. So the fees can be, not necessarily a percentage, but they're still, an international wire could be $45 to
Right.
$75.
Yeah. Right.
If you're doing a huge, the 100,000 or $1 million payment, who cares? But most aren't that size. And it's just the efficiencies, all those things combined. So that's why Ripple feels like they've solved around that problem. So if you're using Ripple's solution, you're looking at a payment that takes less than a minute to get to its destination. And the fees are $1 or less. And that's Ripple largely making close to $1 in fees there.
Right.
But the actual XRP network fees are less than a penny to do that. And the transaction there's basically two transactions. The ones from dollars into XRP, then XRP into that second currency. So there's two transactions, those fees, and total time would be, less than 10 seconds.
Right.
So efficiencies in general, I think, is the way that it would be described. And at the end of the day, there's a lot of political drama around XRP/Ripple. If you remove that, even I don't understand where it started. I don't know if it came from I don't want to point fingers. I don't know if it came from Ethereum community or the Bitcoin community or where it came from. But early days, the XRP token was referred to as the banker's coin. Like whoever named that and got that going in the press, I guess good for them because that probably
Right.
benefited them in the long run. But like, and this is the naive me. I remember being on a plane in early 2018 and watching CNBC, and they were talking about the banker's coin. I'm like,
Right.
interesting. Like, bankers know how to make money. Maybe I want some banker's coin. Like,
I
and
think Ripple was a second token I bought after Ethereum, and then
yeah,
Coinbase I think delisted it, and I was like, well, what am I supposed to do with this
yeah,
now?
the lawsuit. Yep.
Yeah.
And I don't know if you saw the news. The lawsuit is, unless somebody appeals, is officially over as of last Thursday, Wednesday.
Right.
So the settlement stuff. So maybe some bluer skies ahead for that whole ecosystem. But the it's just fascinating to kind of see, do you know that Vitalik he wanted to work at Ripple and add smart contracts to XRP before he started Ethereum, and they decided they didn't want to do that.
Mm-mm.
Like,
I would
think how
never.
different this market could be today. Not to say that it would have worked out well, but it would be different nonetheless.
Right.
So pretty crazy how history can turn on a knife point like that. So
It was Ripple who didn't want him to do that.
They didn't, well, it's not that they didn't want him. He was an intern, and they decided they didn't want to add smart contracts because they didn't, I mean, at the time, nobody understood a smart contract. So they were so focused on keeping the blockchain efficient and designed for payments, not necessarily for the smart contracts. Admittedly, smart contracts in a basic form are coming to the XRP ledger at some point, but nothing at the scope and scale that Ethereum sees. So.
So I guess back to kind of what I was asking before with what would make Ripple as an intermediary for payments better than just stable coins?
So the stablecoin is introducing a interesting challenge to their business model. You don't ever see them say this, but I think about it quite often. It's like, what makes it better? And I think that part of it is there. It's not just XRP. Ripple's built a enterprise software solution that they sell into banks and those kind of parties that they actually do allow stablecoins to be plugged into. I think what they're going to say is that using XRP is going to be more efficient because a lot of these other blockchains cost more from a transaction basis or they take longer times.
Right.
Okay, you set that aside. I don't know if you've seen the news, but Ripple is actually launching their own stablecoin. Like it'll be on the XRP ledger. It'll be backed. Yeah. So like, what's the benefit? It's not clear to me why they want to do that. I think that I know they started that before this lawsuit was over. So it may have been an end around trying to get XRP in the network to be used. And the, in stablecoins is a way to do that. They claim that their partners asked them to make a stablecoin because they're a trusted third party provider. Take it, whether that's true or not, I don't know. But it's what has been said.
Is it a dollar stable?
It'll be a dollar denominated stablecoin with treasuries and very similar to USDC in my opinion. So,
got it.
And guess what? If you can be in the business of running a stablecoin, you are in an amazing business.
Business.
They throw off some serious cash. So, right. Yeah, at least in this current market. So.
Have you kept up with PayPal's?
I haven't. I haven't because it's kind of like on an island. Like you can't really use it anywhere, as far as I know, besides on PayPal, right?
Well, no, it's gotten quite a bit of traction on Solana recently. I think.
Oh, I haven't seen that. Okay.
Yeah, it's like last I checked, over like 300 million. I want to say close to 400 million PYUSD on Solana, and I think they're actually incentivizing pools.
I
Like
did see
PayPal.
that. Yeah.
PayPal is
You get
incentivizing
good
pools.
yield on your PYUSD.
Yeah, so I mean, they're really going full degen,
Yeah. Yeah. It's admittedly, I'm like very skeptical of Solana and everything that is around it. They've got major problems from a technology perspective that no one really ever talks about, and they're paying their validators absurd amounts of money to basically continue to play the game. That I don't understand how they solve their way out of this problem.
They're paying their validators like outside of just the staking rewards, or like what?
I don't know the exact mechanism on how they're paid, but the last time I saw it on a monthly basis, the validators are getting like close to $150 million, a lot of money. I don't know if they're getting this cent extra Solana. I don't know enough, and maybe I should even brought it up because I can't really speak tons to it. But like, it's from what I've read and just the error rates, I'm just kind of like, they've done an amazing job at marketing, but like, and the early on the dumping of the tokens, and like they just keep finding more Solana stashed away in other people's wallets. Like, I don't understand why this is just not public information. I also think a big risk to Solana right now is the whole FTX estate and how much Solana that they hold. Like, how is that going to be dealt with? Is a pretty big risk. So,
Okay. So what layer ones in that, or are there any kind of like general purpose layer ones that you think are interesting?
Yeah, I mean, the work that the Hedera, so HBAR is the ticker for that one. What they're doing is interesting. the so we were talking about T-bills recently. I'll get back to your question in a second, but a quick aside here. So the Open Eden is like I said, small business startup that is tokenizing treasuries on different blockchains. The most recent one they did, was on HBAR was used when BlackRock launched their MMF ETF. That is the money market fund. That is tokenized treasuries. So Hedera is doing cool things. You also have, um, Algorand doing cool things. Both of those could be, they're both L1s. They both are smart contract compatible. They're both quick. Admittedly, they just have marketing problems. Like I think that the teams have solved decent, decently well on the technology side, but like, how do you get, this is why you hear about people tokenizing car titles on blockchains, because it's like you just want to show that somebody's using you, not just like you're just solving for nothing. So you also have this. A bit of this is a not an L1, but an interesting use case for a token is Quant. So QNT is the token. Quant, QUANT, is the company based in the UK. They are basically, you can think of them as building an API to allow blockchains to talk to each other in in an easy fashion. They sell, or they talk a lot about working with basically like not the Federal Reserve, but the UK version, the Bank of England. So around building CBDCs. So they are doing stuff. The reason why the token is used in this case is to use their software. Their licenses are denominated in the token Quant. So if you believe they're going to be successful as a business, you can buy in a token, and those Quant tokens are locked for the period of time that is the license period. So just different use cases. Back to your question about other L1s or other networks. XDC is the trade finance one that we had talked about very early on in this conversation. You're starting to see networks be built more purpose built for the problem they're solving versus trying to be I'm everything to everybody, which you can see from the early L1s. So
Yeah, and I think that's kind of the path I've always assumed it was going to take, is that you wind up with these purpose-built chains,
mm-hmm.
A lot of them eventually becoming private instead of public blockchains. In my opinion, like, you talk about trade finance, like you probably will have to buy into a system that's going to need to make sure everybody's doing what they're supposed to be doing.
Mm-hmm.
But yeah, I think I do have same with you, have a hard time understanding like the long-term success of a lot of these general purpose blockchains, especially the early ones, because like there's newer ones
Mm-hmm.
coming out, the tech's better, and it honestly is, like you said, it's a marketing problem. It's like whoever markets better, because even when we go back to like, Ripple versus stablecoins, maybe Ripple's a little faster, it's a little cheaper, but if you're talking about cutting a wire down from $45 to 37 cents, or cutting it
Mm-hmm.
from $45 to 95 cents, like you don't really care.
What's the
Like,
difference? Right.
right,
Yeah.
right. So yeah, I think the marketing issue, and then it's going to be purpose-built chains that solve very specific problems, and that the people that are in that network are, the ones that are, the ones running the nodes for that network are the participants in
Mm-hmm.
that system. Yeah.
So you don't
Yep.
think it would be the case that like those purpose-built chains would need to like talk to one another, because it's like if
They
they
100% will.
yeah, yeah.
Well, I think you could have that at the end, right? You've got your on and off ramps from those systems. Like maybe you have like it could be even those purpose built chains are L2s. They kind of like roll up to one L1 or something like that. But I think you're going to see things slice. Otherwise, you're kind of like, you don't want your supply chain efforts to be throttled because there's a new NFT drop that's consuming all this, network
Mm-hmm.
bandwidth or something like that. I think you would, you've got a particular problem that requires a particular solution that might even require, particular hardware or particular software. Like I think like just
Mm-hmm.
general purpose
Isn't
for
that kind of
technology is
what
tough.
Avalanche is trying to do with their, is it
Yeah,
like
they've got
parachains or whatever
they've
they
got like
call it?
multiple chains that solve.
Yeah, and it's all like EVM on
Right.
each chain, but then you can whatever make each side. What do they call them? Is it a side chain or
I ca-
it's
I'm not sure if
it's basically
sidechain.
a side chain, right?
I'm not sure if that's
Yeah.
what they call it. But yeah.
Yeah. Yeah, I think that, back to the question that Phil had about like, how do these connect at the end of the day? I think the terminology that you would hear today, which I don't think is the long-term solution, is a bridge. But that's a one-to-one, right? We need a hub and spoke type system. And I don't necessarily even believe that ends up being a Coinbase or in a traditional centralized exchange. I think there's going to be some kind of something that comes along that sits in the middle that is almost like there's no third party there per se. So it could be similar to what Uniswap is, but I think at the end of the day, that's still an entity below it. I don't know how it gets built. It's an interesting technology challenge because it's like you want there to be no third party, but the third party that's running that system could be the counterparty risk there. So like, how do you take all that out? Would be interesting. So.
Right.
I think that's all I got for you guys. You guys got anything else?
No, I mean I think this was a good. Well, Dalton, you were
No. I was gonna say it's an hour of footage that Phil's gonna get to slice and dice. No, I thought it was pretty good. I think
Yeah.
for us, kind of same as you, is like I tremendously appreciate all the experimentation coming along, and there's a lot of these things that look very promising, but it's I want something now that shows that value, and I think it's just really tough to find that. I think there's a lot of other than the stable coins. Like I'm a big fan of stable coins. I think like remittances through stable coins, big fan. PayPal stable,
Yeah.
like I don't Venmo works pretty well for me too, but I'm not. My mom's not in Mexico, right?
Yeah, I mean, I always tell people that the dollar's not broken for U.S. citizens. You may not like inflation and all the other crap, but the dollar works every day. We don't have money problems like other countries. Like you're worried about your money and it may not work tomorrow.
Yeah.
So we have trouble understanding the pains there. But it's a fast moving world. I've often wondered if we had regulations in place before the AI boom happened 2 years ago, if all the developers or a lot of them that left to go do AI stuff had stayed in crypto, what different we would be at this point. And obviously we'll never know, but like there was an inflection point. It was like the summer of 2021, crypto was everything, right? Like, and granted, everyone was locked at home, but like then all of a sudden you had this mass wave of developers migrating over to AI, following the next hot thing, admittedly. So.
Yeah, the people we're talking to next week, they're at Dex on optimism, and they've actually mentioned when I was asking them similar questions to what we're talking about today of like utility and viability and like when does the value come in, and they pretty much said it's a developer problem. It's like we're not getting the talent we need. Like you need tons of people working on this so that one thing sticks. It's kind of like the bigger your population, the more likely you are to get an Einstein. Like we need numbers, and it's just not. I think, like you said, the regulation helps that, making it easier to transition into smart contract development or blockchain development from whatever their existing disciplines are, and then the actual like training up for non-developers that want to get involved. I do think that there is a shortage of engineers in the space for sure.
Yeah.
That's interesting.
Yeah.
It's the first I've heard that.
Yeah.
Yeah, it's the first I've heard that.
Yeah, I mean, there was a lot of them. Then I wouldn't say they all went to AI, but a lot went to AI. Like, does regulation coax them back? I don't know. Like, if I was starting a startup today and it was crypto focused, it would not be in the US.
Right.
This environment is just so toxic. So.
Right.
Yeah.
We're not talking about just developers. They can say, okay, here's my task. I need to, or we're talking people who are actually like ideating and creating and experimenting, not necessarily just the people that can write the solidity to take a ticket and check them out.
Well, I guess just to one more thing we can talk about before we close it out here is your view on the regulatory situation, because it seems like things are starting to, like, it seems like they're at least the verbiage is
It-
turning in a
There's rumbles
yeah,
of something.
right, is turning in a nice direction. And if Trump gets elected, then I think everybody in the space is expecting that to be really good.
Positive. Yeah.
Yeah, but yeah,
Yeah. So the regulations are a topic I could talk all day about. And I look forward to never having to think about them again. The 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 current environment is toxic, and toxic is an understatement. It's multifaceted. It's not just like there isn't clear rules. There's the there's different agencies that are attacking the industry effectively, right? You have Operation Choke Point 2.0, which people thought largely was over with, is still happening. Like, I'll raise my hand and say I've been debanked 3 times, the fund. Like, we don't do anything fancy with the bank account. It was purely like a way to receive cash from investors, and then off it went into crypto. We weren't asking the banks to hold crypto just purely because we were a crypto business. And admittedly, for the time being, we are bankless, and I'm doing everything on chain. And you know what? I kind of like that world. So you have that. You have the choke point stuff, and just the way that they're having banks treat funds. They're making it overly expensive for the banks to be in that world. I mean, you guys maybe have experienced this, but like part of the regulations the banks were getting, and this is why banks are getting rid of crypto companies, is they were requiring the banks to do the KYC on all the individual investors within a fund. So they're having to crawl down a whole nother layer, and then they wanted audits and all sorts of extra stuff that is just like burdensome. So you have that piece. And then you have the true regulations where, as a crypto business, I don't know what rules I'm playing by. Forget a bank account. It's purely like, am I doing something illegal? And the way that the SEC's handled stuff for the last 4 years is they could decide one day that it's not okay, and the next day it's fine. The example I use there is just this last week, the SEC dropped the case against Binance for the BUSD stablecoin. They were like billions of dollars locked up in that. Now it's 70 million. They're like, oh, sorry, no problem.
yeah,
Like,
yeah.
like, that was a hit job is what that was. There's no way around it. And maybe it needed to happen. There was a lot that's happened since the Binance stuff went down in November. I don't think we would have ETFs if the Binance stuff didn't happen.
Well,
personally.
I mean, to be fair to Binance as a company, though, I mean, like
Yeah.
from what we've seen, what came out of it was that it's confirmed that there was some money laundering.
There were some issues, yes, for
Yeah,
sure.
money, but not excusing money laundering, right? That's
Right,
obvious.
yeah.
But we do know that the largest banks in the world get slaps on the wrist for money laundering all the time.
All the yes, yeah, and in bigger numbers. Like,
in
yeah.
bigger numbers. And
Yeah.
so I don't know. I feel I definitely I'm not a Binance apologist, but I think it does. We should point out like really just how unfair.
They've been an
Yeah.
especially resilient organization too, for as much
I mean,
as
they're
grief
printing
as
cash,
they get.
man.
Yeah. Yeah. I've often wondered, like, we went through this stage, so FTX and Binance kind of rolled them into that same chapter. Like, it almost feels like crypto had to have that chapter to get to this next stage for regulators to quote unquote clean it up to make it ready for the adults. And you had to have those actors do what they did, good or bad. And I don't know, it's just interesting food for thought. But yeah, regulations are a mess, or lack thereof. And you see Congress like acting like they want to help. I use the example of the SAB 121. That's a staff accounting bulletin, something that comes from the SEC, basically saying banks can't custody crypto. If they do, they have to do all this extra crazy stuff that basically banks don't want to do. And you had the House and the Senate both pass it, bipartisan support, went to the president, he vetoed it. It came back for an override, and they basically just missed the 2/3 majority needed to kind of override the veto. Like, was that true support in the House and Senate, or did they know the president was going to veto? Like, all the politics are swirling on this. And it just, then you add in the layer that also now the SEC is allowing some, I think it's like 2 or 3 big banks, the biggest, to have exemptions from SAB 121 so they can hold custom crypto. So it's like, why can't we just all have the same set of rules? Why do we have to have different rules? Like, it just, maybe I just want too much of a perfect world here, but it just ready for stuff to be simple, if possible.
Well, I think on that note, we can close this out.
Thank you, Robert.
Yeah. Thanks for doing this, Robert.
I appreciate it, and hopefully you guys learned something, or I didn't waste your time at a minimum. So yeah.
Yeah, no, this was wonderful. Thank you so much.
Yeah.
Awesome,
Take
Robert.
care.
You too.
See ya.